Hello, today is January 21st, 2023. We always start with our disclaimer, review our calls, and then make some predictions. Because it's the weekend, we like to take a new look at the long-term picture. Please follow the rules of the channel. Also remember, I can be completely wrong, and any trade you make should be at your own risk. We looked for the pattern with the early low, which this was, and when the market reopens on Monday, we also think we'll have a pattern with the early low. We said at Thursday's close it was a bullish pattern. We should see higher prices even if we didn't close higher. That turned out to be quite the understatement. This is what we said, should see higher prices. These are the patterns I'm looking for next week. MEJT doesn't trust the whole move and generates a lot of lower targets. 39.2071, 39.2613. Optionally, if it doesn't print Monday, we'll cross it off the list. 39.2564 and 39.2449. So those are all about 50 handles lower than where we closed. Now, could these all fail? Yeah, anything's possible. All I can say is the system's over 20 years old. It averages about 2 or 3 failed targets a year. And there's no precedent in those 20 plus years for so many targets never printing. Now, if we gap up, we don't have to print anytime soon. But if we don't gap up smartly, the rules say these are going to print. Well, MEJT didn't trust the move up here, gives us this target, and in the afternoon gave us an ultimate buy and an ultimate sell. The ultimate buy is played out. Ultimately, it says we'll trade under this complex. Well, let's take a look at the long-term picture, and then we'll hone in on what we think will happen on Monday. Here's my long-term count. It's a very pretty count, makes good sense. I'm going to stick with it unless it's totally invalidated, no matter what happens. The idea is we've completed a huge ABC, which has expanded, which has taken years to form, and we're in the early stages of a strong rally, which will lead us much higher by the end of this year. Now, when we broke this trend line in a straight line, I said I had a rule that when you break an upsloping trend line in a straight line, that you should return to the line. Because this drop was so steep, I said I wasn't going to risk any money on it. But after this rally, it looks like it's at least possible, not that I'm calling for it, but it looks at least possible it could print. Now we are right at strong resistance. We're at resistance from this trend line, and we're at resistance from the 200-day moving average. When you rally to resistance but not through it, either you gap over it or the resistance wins. So if we gap up smartly when the market reopens, I think this trend line's in play, and that's rising, and it's right now just under 4,100. So if we gap up smartly over resistance, that's one of the reasonable targets. We also are close to forming a golden cross. We'll talk about that. Let's talk about bear markets. Everyone has his own definition of a bear market. Many people say a 20% drop is a bear. I've never believed in that. If a stock goes from 1 to 100 and drops to 80, I think it's unreasonable to say it's in a bear market. My definition is a market declining to new reaction lows under a declining 200-day moving average. Well, we have the declining 200-day moving average, but we're certainly not dropping to new reaction lows. In fact, we closed Friday under where we were last May. So that doesn't meet my definition of still being in a bear market. So in addition to the wave count and the failure to drop to new lows, we also have a drop which is overlapping, and one of Elliott's rules is that overlapping patterns are corrective patterns and they get retraced completely, which means new all-time highs are coming. Doesn't mean they happen tomorrow. Now, we had these trend lines break here. We said it needed confirmation by trading under Thursday's close by 1 cent, which we did. So we had a confirmed break and then recovered over both of these lines. And that's not supposed to happen. That's a rejection of the break. It means it's a false break. Now this has to be confirmed too. If we gap down Monday and we don't trade over the close by 1 cent, then this rejection is false. But otherwise, you just can't count that. Not everything works. Now we have this as the end of an ABC down. We've made wave 1 up. We're trying to make an ABC. We think we've completed A. We've probably completed B. And we're looking for the end of wave red C. The end of wave red C should be the end of black 2, and then we start a strong move up. Let's see how we can count this. Well, this is the height of A. We're in the time frame where you can see tops, bottoms, and tops. The 19th was one date, that was here, that was a low. This weekend is another date, so the question is, could this be a high? Now this is the height of wave boxed blue A. You want boxed blue C to have some kind of Fibonacci relationship with it. We have the 38.2. If this is the end of box blue C, and this is the start of wave black 3 up, you want it to be a 5-wave structure, and I can't count it that way. These are 3-wave structures. It could be the end of A of 2, and then we have to form a B and C. That's possible, but I think it's more likely red A. I think we should have red B and then red C down to complete the pattern. Now, when red C down completes, that would be the end of box blue C. You've met the first target at this low. The next target we have would be 50% of box blue A, which is 38, 47, 38. And then these are the other possible targets, 3807, 3679, which I had as a reasonable target. Now we've had this move up. We have an ABC here for A. You have B. This doesn't have to be the right count, but if it is the right count, we'd stop at 39.76.16, and today's high is probably, or Friday's high, could be close enough, although I'd like to see us come closer. So what happens if we stop at 39.76.16, which is a Fibonacci target? Well, if we stop at 39.76.16, and if we drop, wave red C would equal wave red A right at 38.47.54. So if that's the height of A, the height of C is 50% at 38.4738 within 16 cents. So you've got good balance of the waves if we top out at 39.7616 and then have a drop, and that gives you a target of 38.47 plus, and everything balances out if we stop there. And if ABC completes with C equal to A, we have a possible end for wave black 2. Just because that target works doesn't mean other ones won't. Signals are mixed. Monday's pattern has the early low. We could still gap up. It's positive. We rallied all day on a Friday. Nearly always this follows through at Monday's open. If we gap down instead, it's quite negative. It's negative. We have lower MEJT targets. Unless we gap up smartly, the rules call for them to print. There's resistance from a trend line, the 200-day moving average. Put-call ratios have excessive optimism, and NASDAQ McClellan Oscillator and the Volatility Index both are on Bollinger Band sell signals. We have resistance at 39.76 plus cash. If it holds, and a drop to 38.47 could be the end of wave 2. If we rally significantly over that price, which ideally means you gap over resistance on Monday, it makes the rising blue trend line, which is just under 4,100 cash now, a possible target. So we have the date that we talked about. We have resistance. If we gap up over it, we have much higher targets. But if we stop just a bit north of here and drop, we have the end of wave 2 in sight, possibly at 38.47. And longer term picture, we are forming a very meaningful low. We've already made the low, and once things consolidate a bit more here and we complete wave black 2, we look for a strong rally throughout the rest of the year. Monday's pattern has the early low, and that's today's call.